Today we're talking about the top 3 states to buy real estate in. And coming from the guy who's done 4,500 deals, $1 billion worth of single family, I've put a buttload of research into figuring out what the top 3 states are, and here they come.
One shot, now the future is yours. Go! I'm turning dreams into reality. Yeah, it's one shot, now the future is yours. Go!
You're watching this video for one of 2 reasons. You either are trying to figure out where you want to hunker down, plant some roots, and buy a house, or you're an investor like me who says, hey, if I'm going to buy real estate, I'm going to do it in the most intelligent way possible. I will probably make the most money if I buy in the most intelligent location. Today, I'm covering that. Today, I'm going to buy real estate here in the Atlantic Ocean. Yep, that's kind of how some people approach the game of real estate. I think before I can share with you, though, the top places that are the most desirable, where you're going to make the most money, you got to ask this question. Where are actually people moving to? And you know what? There's some really awesome data on this. Check this out. Where did Americans move in 2019? You're going to see all 50 states, and you're going to see that they're either colored from super dark green to like a super light green. And what you're going to find is the darkest states like Vermont and Idaho are where the most people were moving to. The lighter colored states represent like the states where people were moving the least to. So for example, California is obviously a big standout. People are not moving to California. People are moving out of California. In fact, literally California state legislator just declared that they want to impose another tax on you if you choose to leave their state. That's kind of why people are leaving.
You are not leaving this tower, ever!
Also from Financial Samurai, they basically made a list starting from number 1 on down of the top states to buy real estate in. And I'm going to tell you right now, I don't necessarily agree with what you're about to see because, listen, I've made millions of dollars this year alone on certain states that I'm buying in, but what they're attempting to do here is basically rank the states based on population, migration. And you can see that Vermont has a median home price of $260,000. Number 2, Idaho, $288,000. Oregon, $364,000. And then it jumps across the board from like 200 to the high 1s and the low 4s. So clearly the price of a home isn't the most important factor for them, when for me, it's actually a really important factor. Let's do a case study on this just to make sure you understand what we're talking about. We're going to do the case study on Washington State. Go Seahawks. So Washington State has a median household income of roughly $74,000, which is 17% higher than the median US, which means people that live in Washington State make more money by about 17%. You could look at it that way. But its median home price is $413,000, which is 69% higher than the median home price in the rest of the country. In other words, you might make a little bit more money, but honestly, that house is going to cost you a lot more money. As a result, real estate in Washington does not seem to offer what you might call great relative value. You make a little bit more money, but real estate costs a lot more. It's not going to be one of the leading states where people are saying, ooh, let's buy a lot of real estate over there. They're going to say, ouch, it's kind of expensive. Ow. So this begs the big question. When you're selecting a real estate market, Kris, what should you be looking for? A place where it has really strong household income or a place where it has really strong home prices? Well, they've actually created an index for this because I think this ratio is going to blow your mind. I know it does for me. Check this out. They actually re-rank the states according to this price to income index. The lower number is better, like a 3.4, and a higher number is worse, meaning 7.4. And I'll give you an example of this. Number 1 across the top, Texas. It's number 14 in migration. The median home price is $208,000, but look at this. The median income is $61,000. This low price income of 3.4 essentially means these people make a lot of money relative to the cost of a home. That means for these people, homes are super affordable. It's going to be super opposite if you look at LA. People make this much money and houses cost that much money. Make sense? So places where people make good money, but the houses are relatively cheap are like Texas and Tennessee, South Dakota, South Carolina, North Carolina. Not a lot of people live in the Dakotas, But let's look at the opposite. Like, where do people make the least compared to the cost of homes? Washington, D.C., homes are outrageous. Oregon, Washington, Nevada, you take a look at some of their indexes, and obviously DC is 7.4. It's the highest. Oregon and Washington are in the 5s. Well, now if we take the information on a combined valuation, and if we mix in the information on migration as in, all right, we know where it's cheapest and most affordable, but we now know where people are moving, put the two of them together, look what we got here. We got a whole new thing with some beautiful information, and I want to highlight a couple of areas. Take a look at Tennessee. It's ranked number 2 because it has migration out of the 50 states of number 11, but it has super affordable real estate for the type of income because it's a 3.6. You and I know that that's a really low number, and yet a lot of people live there. That makes this very interesting to me. Scale down a little bit further, and ranked number 10 in valuation is Florida. It's number 7 for migration. People are flocking to Florida, but it's a little bit more expensive. It's $246,000, and it still has a good, strong median home income. Its price income is 4.6, obviously higher than Tennessee, but check it out. Florida is what you call a growth market. It has loads of appreciation. People are moving there. It drives the prices up. Tennessee, it's not as high on migration, but it is so affordable that you're getting some super stable rents out of it. Now, those are just 2 of the factors that I use when evaluating where I should go and buy real estate. In actuality, there's 15 different factors, and every year I republish this document with updated information, basically sharing with you the hottest places to invest in America, the places where you're going to get the highest returns, where you're going to make the most money. And if you take a look at it, top-down macro analytics says that beyond population growth and affordability, you look at things like employment growth, wage growth, supply and demand. How much real estate do people want out there? Business growth, household formation, and obviously migration like we've looked at. In addition, though, there's some bottom up that I also like to look at when it comes to the economy. Like, well, what is the cost of renovation in that specific market? Because if I buy real estate, guess what? Now I have to go to Home Depot and I have to buy crap. And is it more expensive there or less expensive? Or lease up timing, rental rates. Do I get a higher rent in that market or a lower rent? I've got rent growth, operating margins, turnover, occupancy rates. Is it like people love to just rent over and over and over again? Or do they move out and it takes me like 3 months to fill the house again?
I can't wait any longer.
When you take the top-down macroeconomics like we've been talking about, and then you combine them with those microeconomics in that local market, it reveals something. It reveals the hottest markets to buy real estate in. And I've been playing this game since 2008. In fact, in 2008, when the subprime bubble burst, people were giving all their real estate back to the bank and houses were on sale for crazy low prices. And I was going to the auctions and I was buying $300,000 homes for like 100 grand, 120 grand, buying them cash. And in the first 5 years, I made my investors over $100 million. And that all comes down to one thing: location, location, location. So Kris, what are the top 3 locations where you're buying today? Let me show you. Drum roll, please. Check it out. Number 1, Florida. If you're north of Orlando, you're investing in the Villages, you're literally in a market where all the baby boomers are flocking to. Prices on homes are $300,000-$400,000. I'm buying them for under $200,000. You do a hold in that area for 5 years, you should be making 30 to 40% a year on your money. Next, I go into Memphis, around Tennessee, on the southeastern side, on the right side of the railroad tracks. You're going to find an older community of homes priced between $150,000 and $200,000. That is a cash flow market. Like, it doesn't have the kind of growth and migration that Florida does, but what it does have is a really strong rental economy. So homes there will literally rent for $50 to $150 higher a month than anywhere in the entire country. Next to that, you've got Indianapolis in Indiana. Indianapolis is another cash flow market. It's a lot like Tennessee. I'll trade off back and forth. Indianapolis has slightly higher affordability, like the homes cost less. So between those 2 markets in Florida, that is where I'm bankrolling consistently 25 to 35% annual ROI. And for just a moment, what does that really mean? That means that I double my money every 2 or 3 years, as opposed to letting it sit in the stock market where it's doubling every maybe 15 years. Leverage lets me go far, lets me make a ton of money. But I'll tell you, you know what's scary? It's buying real estate out of state. And if I just mention markets where you don't live, you're thinking, well, Kris, that's really good information. Thanks for the video. But guess what? That's kind of inaccessible to me. I'm like a nobody out there. What am I going to do? Get on a plane and like start looking at houses or like buy something online sight unseen? Are you crazy?
There's nothing in here. I've been cheated. It's an empty box. They sent me an empty box.
I get it. And that's why I built a team of 200 experts in those 3 markets that literally help me transact the very best deals that make the most money. This document, it's free. I provide it to the public. If you click the link below, it'll show you how you can actually access the best real estate. It'll show you what price range, what zip code to buy in. It'll show you how to make the most money, and it'll even show you how to make it fully turnkey. Turnkey as in, hey Kris, I dump money in a 401k and it gives me a stupid 6% average ROI over 30 years. Or, hey Kris, I put money in an annuity and get 3 or 4%. Or, hey Kris, I got money sitting in an IRA because I was told to. But all of these single digit ROIs are doing squat for me because single digit doesn't compound powerfully in a lifetime. You're gonna double your money 2 or 3 times in your working life, that's it. You get into the game of real estate and you start tapping into 25% ROI, and guess what happens? Literally, mathematically, you make 26 times more money over 20 years than the stock market. Now that's pretty dope. So if you want it to be fully turnkey, if you want it done for you, or you just want to see the strategy in action, click the link below. We'll get this sent in the mail to you, and then you can read up on the hottest strategy in single family real estate. Just about every day, I help someone in the world buy out-of-state real estate intelligently, turnkey, and I make it super easy. If you want to see what that looks like, check out this video. You can see Ryan and his wife literally for the first time what it's like to buy out-of-state real estate, sight unseen, and to get rolling in the dough like a baker's knuckles. I am here to deliver the news of how we actually did in the first 6 months of our partnership. Nice. Now, you guys remember the goal was to actually see if we could buy